Hello viewers, in this video I'll be going over Gold Miners Jr. ETF ticker symbol GDXJ. Today we are up 3.4% and we have about 2 hours left in trading, and on the 1 hour chart we are maintaining support on the 9 moving average, and we're at overbought territory on the 1 hour RSI. We start to see a divergence shaping in the 1 hour MACD. On the 4 hour chart we have not hit overbought RSI, so there may be some strength left in this rally, and we have not touched support on the 4 hour moving averages yet. And on the daily chart we also have not reached overbought RSI, so there's still more room to go. And the MACD started to converge, indicating there's much more strong buying power and this trend may head on higher. And as for support, if we were to lose steam and come back to or revert to the mean, I would indicate the 18-day moving average. Reason why: this 18-day moving average coincides with past support that dated back to July 19 all the way to August 2nd, so this is good support at the moment. And as for resistance, I'm looking at resistance that date back to multi-year high. So I see we are at current resistance at the moment. We see a peak in November 16 and in, I would say, February 17, 2017, and this one is in November 2016. So we are at resistance, but if we do push on higher, the next resistance will be at this price range of $45.20. And reason why: we found support at this level. Since we're below the support, it acts as resistance. So we still have some room to go if we were to move on higher. So if we were to move down lower, that price movement is roughly around 6.4%, and if we were to expand out and move on higher, that price movement is 6.4 as well. So let's head to the forecast model. So on here, the forecast model, I'll go day by day, where GDXJ will head to next coming days. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecasts we should look at? First, we need to compare the forecast or trend that is the best match to the current trend. So we have the current trend right here, and below it is December 13, 2013 to March 13, 2014. I believe this trend is the best match to the current trend. Reason why: so what we have in the beginning of the trend, we were touching the bottom Bollinger Band right here, and we proceeded to move on higher to touch the upper Bollinger Band once right here, and another touch here, and couple times, one right here, and then finally the fourth one right towards the end. In between those is we reverted to the mean and touched the middle Bollinger Band right there. So we start to see similar patterns shaping. We were below the middle Bollinger Band right there, and then we proceeded to move on higher to touch the upper Bollinger Band right here. So in this instance right here as well, the second one, the third one, and the fourth one right there towards the end. And in between them is a reversion to the mean touching the middle Bollinger Band. So what we have is 1, 2, 3, 4, 5, 6 points. We have 1, 2, 3, 4, 5, 6 points. So there's reason to believe that the trends and patterns are the same. The forecast and outcome should be the same. So again, the trend that we examined was, I would say, December 13, 2013 to March 13, 2014, and it looks like Gold Miners Junior was down about 20%. Again, this is past performance, and we should take this as a grain of salt. And that is all. If you enjoyed this content, feel free to like, subscribe, comment, and thank you for watching.